let's start now.
Recording in progress.
So today, 3 key financial statements. So the question is, I'm not working in finance or accounting. So why do what are the benefits of attending financial statements? So maybe you can find these are technical things conducted by the accountants or finance people in your organization. So what are the benefits for let's say for non-finance employees or non-finance, anyone from non-finance background to understand, let's say, basic financial terminologies? If you can share with me your ideas, why, what are the benefits? Where I can use these things in my work, even though I'm not working in finance, and there are some financial and accountant guys who do all the jobs. You can use the chat box also if you want. Any idea? A general knowledge. Okay. What else? Fine. General knowledge. But what are the benefits? How can I use some basic financial understanding in my work, even though I'm not working in finance? What could these help me to do my job better, maybe? Mansoor? To make informed decision when doing planning, correct? Mansoor is safe, because I can see your name here in the beginning, so that's why. Any idea? Rajasri Mohan? To keep track of the expenditures and income, correct? Guys, I need some interaction. Otherwise, I will assume that you are not there, because I cannot see you, I cannot hear you, okay? You will understand it better. Just any concept there's nothing wrong, nothing right. Just share your idea. Why do you think that it might help me in my current work? Finance
more
is a key.
collective and
Yeah, sorry.
More coordinate with your planning team like FM and different other department to get the latest updation from them.
Correct. Excellent. And I got here, Shamara, most of the functions linked with cash flow. Yes, correct, cash flow. So when we look at that finance, when we talk about finance and accounting in general terms, but maybe we will focus on something which you feel it's related to your work or it's related to something you're working in your organizations. So let's look first why it's important to know finance. Now, maybe if you look at the introductory level or the people who don't have experience or low-level jobs, you might not need that much finance. But the higher you go in level and managerial levels, the more you need to understand finance. It looks like it ended up when you reach a top-level positions. You don't need that much technical skills. Technical skills your team can do it. Mainly you need managerial skills such as leadership skills and financial skills. Financial skills doesn't mean you don't know you want to do accounting or debit and credit and these things. No, understanding how to read the financial statements in order to help you to take a better decision for your department or your organizations. So let's look first at the entry level. Usually at the entry level, you don't need that much financial let's say skills or knowledge to do your job if you're not working in accounting or financial matters. Mainly focusing on your technical skills, which mainly 95 to maybe 100%. Now let's say if you move to a supervisory level, you are let's say you are in charge of the warehouse, you are a supervisor somewhere in the operation team or supervisor mid-level management in HR or any other departments, you will feel that things change a little bit. If you look at this one, technical skills 95%, This is an average. So you have a team, you can cascade down or delegate part of your job to your team, and mainly you need how to manage your team, many managerial skills you need. How to manage your team, how to motivate your team, how to understand how to create objectives, smart objectives. Mainly these are managerial skills. But at the same time, you start to need to understand how to manage the budget of your department. So when you say managing the budget, that means this is financial skills. Understanding how to control the cost in case you are a cost center, and state how to generate better revenues in case you are working in sales department and others. Now, let's say if you go higher also in managerial level, mid-level positions, such as you are in charge of a certain department, HR manager, training manager, operation managers, things change. Start to delegate jobs to your supervisors, supervisors delegate jobs to their subordinates. So mainly you need to focus on how to organize your department, how to organize it, how to plan, how to implement, monitor, and control the tasks within your team, plus how to manage the cash flow, how to ensure that your department is working within the budget limitations. So many of these are financial skills. So I say how from where you need to control the cost, how to cut the cost, how to ensure that your department is in line with the organization's strategic objectives in terms of controlling the cost. So this is mainly, you need to start to understand some financial terminologies. So you will find that maybe 35% of your work is spending on financial things, not technical things. Technical, you start to organize managerials and financials. Let's say also we're going to the top level positions. Within the top level positions, mainly you will focus on managerial and leadership skills and also financial skills, but different type of finance. While mid-level managers, they will focus mainly on budgets, how to control the budgets. Maybe in top level managerial level, they will look at source of revenues, how to where to invest, how to finance my business, how to ensure that my operating costs can cover the depreciation, etc. These terminologies we'll learn today. So it looks like financial knowledge or financial understanding is very important for you to succeed, even though if you are not working in accounting or finance, especially if you want to get promoted or you are you are in charge of a certain department or unit or strategic business unit. So if we look at this pyramid, it looks like at the entry level, it's not required from you to know finance, but the higher you go and become supervisor, you need some basic financial understanding, especially cost of material, maybe understanding attrition rate if you work in HR. It depends on the department. Mid-level management, you need more skills, and it reached top-level management, maybe more than 35% even. But in general, this is what it is. So 35%, look at the managerial skills. It ended up technical skills. You can delegate it, focusing on managerial leadership and financial skills. So what we need to know is about finance is to understand the financial position of the organizations. Basic terminologies about what we mean by assets, what are the liabilities, what is equity, how to invest, how to finance our investment, what that means. Sometimes the organization might be profitable but doesn't have cash. It looks like many organizations work fine, but they have a collection issue. It ended up they cannot survive even though the organization sell and control costs. Many times the organizations have cash, but they have a wrong investment decision. It ended up also the same thing. So different things we need to look at. We understand what we mean by financial position. Second, we need to look at something called financial performance. What are the profits, revenues, earnings, income, cost? What type of costs are there? Some costs are based on volume, some costs based on period cost. And then we need to look at the liquidity of the organizations. especially the cash flow. Many organizations, as I mentioned, they work, but they have a problem of collection. Or they don't have problem of collection, but they cannot manage between cash in and cash out. So it ended up, they cannot survive. So we need to look at three things then: financial position, financial performance, and financial liquidity. Three things. That means we cannot combine all these things in one financial statement. That's why we have mainly three financial statements. One is financial position, one is financial performance, and one about financial liquidity. Okay, so that means we need to look at the three financial statements. So I have a question now here, if you can answer this one. The aim of everyone, even personal or finance, is to increase the net worth. Okay, so if I want to increase my net worth, which means how much I'm having, let's say financially rich, financially from so how to measure? What is the true measurement of my net worth, your net worth, or your organization net worth, do you think? How can I, if I ask you now, how much is your net worth? What measurement do you do? What calculation do you do? What formula? How can you measure how much is your net worth? Is it how many buildings you have, how many houses you have, how many cars you have, assets, or what? If you can share with me your idea, chat box, or what do you think? It's an important question because everything is based on this formula. What is the true measurements of your net worth? Okay. Waiting for your answers. What do you think? Anyone? All assets minus liabilities. Excellent. RM. This is what I see, RM. Excellent. All assets minus liabilities. Okay, maybe you know it, but maybe others, they don't know what that means. Assets minus liabilities, etc. Assets. Okay. So that, yeah.
It means all the things I have, like a cash, building, equipment, everything I have it in my, like a business. I will minus all the land or the things that I have to pay to the bank or supplier or someone.
Correct. Excellent. What you said is correct. Salim mentioned assets. Correct, but it's not enough. The more I acquire assets, that doesn't mean, let's see, if I acquire a house, or I buy a house, or I buy a car or something, that means I become more rich, or yes, correct, Salim, minus liability. So it looks like correct. So, but how to reach this one? How to manage? So this is the basic things. All things we do, whether personal or within the organization, is to ensure that at the end of the period, at the end of the financial year, our net worth increase. This is our aim. We work on daily basis. Whether we go to work, the aim is to ensure that everything is going to work properly, to ensure that at the end of the year, we will have better net worth than the beginning of the year. Because many times it doesn't work today, even though we know the formula that assets minus liability will end up with having better net worth, but it will not work like that always. We'll go on much details on daily work. So it will end up, maybe we're working properly, but we don't have cash. So this is where we need to look at. So let's go now through true or false activity, which will help us to introduce the subject better. Okay. Now, I give you the answer. Just read it. All liabilities are interest-bearing debts. True or false? Just let me see the chat box. Sorry for that. Yeah, false, true.
No, it's
false.
wrong.
Wrong.
False.
Yes, correct. But why it's wrong? What is liability? Actually, what's the definition of liability?
Maybe sometimes the customer have to give us money.
Anything? Oh, correct. Now, let's say if I borrow 1,000 dirham from my friend, so I will pay it maybe next month. So it's a loan, but they will not ask for interest. But if I take the same amount from the bank, I have to take if I use my credit card, but I did not pay it on time. So there will be interest. Interest, which means cost on my loan. Loan is liability. What's the meaning of liability? I'm liable to pay it. I do some work today. I borrow some money. But this borrowing, let's say, is a liability for me to pay it in the future. So it will be generating future economical outflow from my cash. So that means liability. So many organizations work with liability. There's nothing wrong to work if you take it. But the most important thing, how to manage and how to. So correct, Zainab, you said liability like loan is something like when you take a loan from a bank, it's a core liability, you need to pay interest. If you use the credit card, you don't pay it in time, you will pay interest. But if you take a loan from other sources, that doesn't mean you have to pay interest. So the question is, answer is false. So the more I acquire assets, the more my net worth will increase.
False, I think.
False, true.
That's false.
False, okay. Now, Salim, you mentioned true, but do you think it's really true? The more I acquire assets, what's the meaning? Okay, assets, what's the meaning of assets? Assets, something I own. Something I own. With the aim of generating future economical benefit for me. Or, because we have two types of assets. So if I buy a car, that's mine as asset. If I buy a house, that's mine assets. If I buy a computer, it's mine an asset. So I could buy the computer, but I will not pay it now. So that means if I buy, let's say for a computer, it's 10,000 dirham, but I did not pay it. So that means I have more assets, but at the same time, I increase my liabilities. So 10,000 minus 10,000, nothing changed. So the question, the more I acquire assets, the more my net worth will increase. It's not accurate. We need to explain it better. Assets can appreciate or depreciate, correct. So we will look later on at we have many types of assets. Assets that appreciate in time, assets might depreciate in time, whatever it is. So that means when we ask a question in accounting or finance, we need to look at the other side to know the answer. Well, that's why if I acquire assets, that means either I pay it or I will pay it in the future. So the question will be able me to answer, I see, did you pay it or are you going to pay it in the future? So this statement is wrong. Now later on we'll explain it what. When we do the exercises, we will know why it's wrong. Welcome, Salim. Now this formula, do you think it's wrong or right? Assets equal equity less expenses. Is that correct? What do you think?
No, it's wrong.
What's the correct one?
It should be the asset liability plus equity.
Okay, fine. Well, this is the most important formula, actually. This all goes back to the assets equal. Don't worry, later on we'll explain everything for the people who do not know what that means. So this one is wrong, correct. Assets equal liability plus equity, not minus, plus. Okay, now minus, yes, correct. Plus An overdraft is a current liability. Now we know that liability is something we are liable to pay in the future. So we are expecting to generate economical outflow from our organization. An overdraft between when you use your credit card. It's liability, you are liable to pay, but is it current or non-current? So what's the meaning of current, which means currently? Non-current, which means in the future. Current. Okay. Correct. I'm not going to explain it one by one because after we finish, we will understand it all together. It's all linked to each other. It's correct, as you said, it's current liability. Plants and machinery are an example of liability.
No.
Okay. Do you agree, everyone? False. Excellent.
False.
Plant and machinery, something assets, correct. Just let me 1 second to. A balance sheet must balance. Yes, correct. Of course, of course, must balance. Why it's called balance sheet. So that's the important. Actually, it looks simple, but it's very important to know that why it should be balanced, because the equation of accounting is all goes about balancing things, about transactions, debit and credit. The final entry in the profit and loss account is gross profit. Maybe loss, correct. But is it a gross loss or gross or final loss? Is it final, net, or gross?
It should be final.
Final, which means net.
Yeah.
Finance can be generated internally or externally. Yes. Profit is liability for some business. False. Maybe. It could be. It could be. Terminology, technical wise, profit is not liability. Profit is a profit. But it could be sometimes that we have a lot of profit. We overlook some source of liquidity on the equation. Profit and cash are the same? No. Access. False. Fine. Okay. So let's start to give examples of everything. So let's take an example. If I want to start up a company, any business, whether small business or big business, whatever it is. Let's go step by step to understanding from the basic. Let's say, for example, I want to invest in something. What is the first question I have to answer? So you have like your vision, your dream, your idea. You want to invest, whatever it is. Let's say a coffee shop. This one, take an example of a coffee shop. So the first thing you need to look at after you do your feasibility study and you do everything, from where I will get the money. Excellent. Money of what? You will get the money to finance what? Correct. Financing what? How much I need for what? Excellent. For the project. The project consists of what? Okay. Let's say for the operation. Excellent. For this project, which is a coffee shop, I need to look for, correct, for the business and operation. I need to look for the how much I need to buy machines, the decoration of the shop, rent or buy. Correct. Everything you are saying correct, but let's do it step by step. Which one first? All are correct, but which one is first? So let's look, for example, I need to invest in what? The first thing I need to look at the term investment, invest. So the first thing I need to look something called investment decision. This is the first question. Investment decision. Shall I buy or shall I rent? Shall I buy the shop or shall I rent? What type of machines I need to buy first? This is before I will look at other things. This is the first thing I need to look. So for a coffee shop, correct, I need to plan my investment, because investment is a translation of your vision, of your project, of your idea. You need to identify what do you need and how much it will cost you. So mainly we need to look at the investment decision in a form of assets to help you run the business. Correct. Later on, we need to look at these machines, how to depreciate over time, accidents. So first, we need to look at, for this coffee shop, what we need. Maybe we need machines for the start to run the business, furniture. We need some, maybe 3-4 computers, chairs, whatever it is. So all these things, it will be my assets. So I will decide to buy. Let's say, for example, the total cost of these will be, let's say, 500,000. So 500,000 dirham is my investment, total investment. Now, so this is the first question. Fine. What is the second question now? You already mentioned it before. You already mentioned it, the second one. How to finance the business, correct? How to finance the business? We have, as we mentioned, two sources of finance. Excellent. Source of finance. Source of finance could be through debt finance, or you pay it, you invest from your saving, you invest, you and your partner, whatever it is. So either cash, either loan. So we have two options here. So the second question is to look at the financing decision. So we have, as you mentioned, Shaykha, correct, cash or loan. So let's say, for example, this one, we need to find two sources of finance. So we have option one, to take a loan. This is option one. Option two is to finance the project from my saving, or if I have another partner. But it will not always go the same, like 100% here, 100%. So let's say I can manage to take a loan maybe for let's say I will finance it, I will pay 100,000. However, the 400,000, I will look for a source of finance from a bank or another financial institution. So then it will be 400,000. So that means 80% of my investment will be financed from that, and only, sorry, 80 here, 20% this will be my equity. That means the money invested from the shareholders is called equity. So it looks like, if you look at this equation, my investment is, it will cost me 500,000. Here, I'm talking about the assets. I will finance it 100,000, 20%, and the rest I have to take a loan because I don't have enough money, or I have, but I will not put all my cash in this business. Now, so that means this 500,000 is called assets. So that means assets equal. This 400,000 is a loan, liability, I have to pay. So assets equal liability plus equity. Every time I buy something, assets, I own it. I need to know how to find it. Even if I buy a computer, 5,000 dirham, for example, either I pay it cash or I pay it in installment, whatever it is. So investment decision, financing decision. Financing decision, it can be liability, it can be equity, or both. Equity means the amount invested by the owner of the organization. This is called equity. The amount invested by the owners of the organization. It could be shareholders, it could be one owner, whatever it is. So this statement or this formula is called accounting equation, assets equal liability plus equity. This statement, it's called statement of financial position. Statement of financial position. What that means, this is called balance sheet. Balance sheet. Every time I buy assets, on the left side, I need to look at the right side from where I find it has to be balanced. I cannot buy assets 500,000 and I finance it with 400,000. Still, I did not finance it 100%. It has to be balanced. This statement, it will show my position currently at this moment. My assets is 500,000. However, that doesn't mean my net worth is 500,000. No, because there is 400,000 I need to pay. And this 400,000, it will generate a cost or interest. I will pay it in the future. So currently my net worth only is 100,000, which is mean my equity. Correct. Debit has to tally with the credit. So that means accounting wise, 500,000 is debit, credit 400,000 liability, and credit 100,000 equity. So that means currently, what is my net worth? It's only 100,000, nothing. Because even though I have assets equal to 500,000, but actually I have 400,000 loan. So nothing changed now. When I start the business, exactly, I have 100,000, still I have 100,000, even though there is 500,000 showing in my balance sheet. Now let's look at the business when it will start. The business starts, let's say. So the first thing we need to look at when the business starts, the cost of the product, how much I need to sell, what type of product, what type of services I provide, and how much I need to profit for every unit. Unit, it could be a service, it could be a product. Let's say for simplicity, for this business, they sell one type of product. It's American coffee because it's a coffee shop. So the first thing I need to look at, the sales price per. Let's forget about this statement now. Forget about it. We have invested. When we look at another statement now, sales price per unit. unit, it could be a service, it could be a product, whatever it is. So for this one, shall I price it at 10, 15, 20 for 1 cup of coffee? If I price it at 10, I need to look how much this will cost. If I price it at 25, maybe no one will buy it, or I will not have enough because maybe it's still a new brand. Maybe people will not pay 20 dirham for 1 cup of coffee. Shall I price it 5? Maybe it's very low. So I need to look at, let's say, for example, I will price it at 10. So that means every time I sell 1 cup, this is my revenue. This is called revenue I generated. But every time I sell 1 cup of coffee, it will cost me. It will cost me materials. It will cost me cup, coffee beans, water, sugar, whatever it is, these things, ingredients. It's directly related to the production. If I don't sell, I will not incur any cost. But the more I sell, the more cost I will generate. So let's look at this one here. If I produce and sell 1 cup of coffee of 10, doing my calculation, it looks like it will cost me 4 dirham. The plastic, the lid, the plastic cup, the lid, the coffee beans, water, on average. So that means every time I produce and sell 1 cup of coffee, I will generate 10 dirham, correct? But it will cost me 4 dirham. That means the profit will be only 6 for 1 cup. If I produce and sell 2 cups, it will cost me more. The more I produce, the more the revenue will increase, but at the same time, I will have more cost. Why? Because I'm using more materials. If I don't sell anything, there will be no cost. But this is not the aim of the business. The aim of the business is to sell. The most important thing, how can I control this cost related to the generation or the production output? Okay, so that means every time I'm selling more, selling more. So this type of cost is variable cost. Why? Because it's not fixed. It's changed with the change of the production. The more I produce, the more I use material. The less I produce, the less I use material. So that means it's called a variable cost. It's not a fixed cost or a direct cost related to the generation of the output. Output could be a cup of coffee, could be a car for a car manufacturing, could be a computer, depends on the organizations. So if I will look at this equation here, so sales price per unit, 10, then second thing, cost of goods sold, 4 dirham. So that means my profit for 1 unit is 6, which is 60%. So that means every time I sell 10 dirham, it will cost me 4. If I sell 2, 20. It will cost me 8. That means it will be 12. Even though the profit is increasing, the sales increasing, the cost of sales increase at the same time. So that's why it's called a variable cost. Now, it's called direct cost of sales or direct cost of goods sold. Cost of sales in case of a service, cost of goods sold in case if it's a production. So that means the second thing is I need to look how much I need to sell, to break even, or when the total cost equal to total revenue. Now, so we found that there is this type of cost, the variable cost, but there are other costs or expenses. It's not included in here. What do you think? What are other costs and expenses not included in the material cost? Salary, correct? We did not include the salary. Utilities, correct? It looks like we include only one cost, only material cost. So the second thing we need to look at this cost here is called the volume cost. Volume. It goes up with the sales, volume cost. The more I sell, the more volume, which means I produce, the more cost will incur. That means the volume cost based on the quantity produced. Now let's look at the other type of cost and expenses, which is not related to the volume, not related to the production, it's related to the time or period cost for a 1 month or 1 year. So that means I need to look at the salaries. Salaries is a monthly cost. It's not a volume cost. Whether I sell or not, I will pay my employees. So it's a period cost, which means from day 1 to day 31, or from day 1 to day 365, depends on the period I'm looking for this statement. So salaries, operating costs. So those it's called operating expenses. Operating expenses. Expenses related to, it cost me how much I need to operate the business. I cannot operate the business just by selling, and it will cost me material because I need to rent a shop. So it will look like I need to pay rent. It looked like I need to pay utilities, which means electricity, water, whatever it is, all these things. All other costs or expenses indirectly related to the production, which is, I will pay it, I will list it here. It could be 100 maybe, whatever it is. So the question here, how much, I will look at the total. Let's say, for example, I'm expecting the total of this 1 year operating cost will be, for example, maybe 3 million. So the question is how much I need to sell to cover the 3 million. How much? So that's why the question is, what is my break-even point? Break-even, which means the total sales will, the total revenue will equal to the total cost. So that means 3 million divided by 6. Will equal to how much? 3 million divided by 6. How many products I need to sell to break even? That means I need to sell 500,000 cup of coffee within 1 year, just to break even, just to cover the 3 million, because here is already the six profit. So the question here, 3 million is big. Can I cover it? So that means I need to reduce the rent. Maybe I will rent somewhere else, reduce the salaries, or I need to increase the price of the 10 dirham, or reduce the cost, whatever it is. So let's say, for example, if they can sell, so I need to add for it how much I need to profit. So in addition to the 500,000, how many unit I need to sell to generate? I need 20% net profit, whatever it is. So at the end, I will look at the sales minus cost of sales, I get profit. This profit, as a total, it will be gross profit. And at the end here, gross profit total multiplied by 600, sorry, 6 multiplied by 500. So that means 3 million. So let's say, for example, if I sell 550,000, I will generate 3,300,000. Okay, so 3,300,000 gross profit minus 3 billion. I will get my profit here of 300,000. So this will be my operating profit. So that means sales minus cost of sales, which means the volume cost. I'll get gross profit minus the operating cost. I will get the operating profit. Okay, so this statement is called profit and loss statement. Profit and loss. This is different statement from the balance sheet. It will tell me how much I generate revenues minus cost of revenue or cost of goods sold, cost of sales. I will get gross profit minus operating cost. I will get the operating profit. So this operating profit here, sure, there will be depreciation. It's not, we'll not go in much details. Let's consider this one is the net profit. So this, how much we get is 300,000. This 300,000 is what remains for me at the end of the 1 year. So the whole period I work is just to be able to generate 300,000 as a profit. So usually when you sell revenue, you either collect it as cash or you will collect it in the future. So it'll be account receivable. When you buy material also, either you pay it on cash or you pay it in the future, it will be account payable. At the same thing, operating cost. Let's say for simplicity, we consider everything cash here. So we receive cash, we pay cash. This 300,000 will be new cash for me. It will be at the end, it will add it here to the balance sheet. My assets now, I have additional assets in a form of cash of 300,000. But from where this? From equity. It's not from loan. So that means it's a form of something. My profit, I did not distribute it. It's retained earnings. The earnings, I return it in the organization. It's called retained earnings in a form of 300,000. So if I look at after 1 year, my balance sheet is better now. I have 300,000 more cash from equity. Now I need to pay my, start to pay a payment of this loan. In addition, this 500,000 as an assets, it will lose its value by time. So I need to reduce its value every year. It's called depreciation. Part of it, it will be depreciated. So I need to ensure that I can generate enough revenues from these assets before it's depreciated, because it will cost me also maintenance cost. But it's not the discussion today, because we don't have enough time, just to introduce you the basic things. So this is the statement of financial position. At the end, if you look at the other statement, profit and loss statement, it's just temporary. How much you sell every month, how much it costs you, how much you save, how much you sell every year, how much it costs. Similar to your salary, how much is your salary this month? At the end of the month, how much you spend, how much remaining from your salary. This will be added to your bank account. Month after month, your balance sheet. So the profit and loss statement is just a temporary statement, which will show you your performance, statement of financial performance, how much you will be able to sell, cost you, and to generate. So by looking at the profit and loss statement, I can understand how much the organization was able to control its cost of goods sold. Those people who are in charge of procurement, like purchasing, the people in the operation team, they are in charge of reducing the cost of the production. I use less material, so I will save. I find a supplier with less price, with the same quality, so I can save. So if you look at every item here, there is one department in charge. If I'm working in procurement, or I'm working in supply chain, or I'm working in operation, cost of goods sold is where I need to look at. Other costs are salaries, utilities. Every department is in charge of its salaries, of its utilities. Every department will prepare a budgeted profit and loss, how much every department is expected to spend for next period. Because if you look at the profit and loss, everyone contributing to the cost. If I save 1% from my department, I help the organization to save 1% from the operating cost. So that's why how I start to prepare the budget was to be able to how to control the cost and minimize the cost. There are different costing methods used how to do these things. So that means even though I'm not working in finance, but this is related to the organization. I am part of this equation. Because the total salary cost is distributed among all the departments, total utility distributed among all the departments, etc. The more I can save from my department, other department, all these departments will help the organization to reduce the cost. If the operation team can save in the production, they can help the organization to reduce the cost of production of 1 unit. If they can save 1 dirham, that means the gross profit will increase to 7. The same thing, the procurement, purchasing, if they can save, having better negotiation with supplier, etc., they will be able to reduce the cost. So we look at the statement of financial position, balance sheet. It will show you how much I own, how much I owe, and how much is my net assets or net worth. Profit and loss, it show you how much I generate revenue, how much it cost me, and how much the operating cost was able to perform good or not. But both statement doesn't show the cash, because in accounting is accrual basis, which means every time I recorded the sales is when it happens, not when I collect it. For example, if I sell a product today, I will put it as sales, even though I will collect it maybe after 3 months. So the profit and loss statement will show me that there is a sales, there's a cost, but that doesn't mean it's a cash. So that one's supposed to be another statement called cash flow. It will show me how much the organization has. It will end up maybe I'm selling, but I'm not collecting. So I've looked at profit and loss statement. Yes, fine, I have profit, but I don't have cash. So it look the cash translated into account receivable. My assets with someone else in the market. So that's why also there are 3 financial statements. Balance sheet is the main one. It's the aim. The aim is to enhance your assets and increase your assets, but from equity, not from the liability. Profit and loss statement, how to perform, and the cash flow, if you collect it. You might end it up that you are performing good, you are selling, but you are not collecting. Maybe you are promising the customers with better credit facilities. So that's why the sales are increasing. Otherwise, but it will end up, you are not collecting the money. So it's a cost in the future. So that's why it's very important. Sometimes that's why if you have more profit, it could be liability for the organization, because the organization is happy that they have profit, but it's not able to collect the profit. Okay, because today we have only introduction, we'll not go in much detail. This is just an introduction about the concept of finance to that finance for non-finance or is not about like doing accounting. This is the technical team, accounting, the specialized, they are doing these things. As a non-finance people, it's very important to understand the concept, and it will help you to generate doing your budget. Budget, which means preparing your expenses, which will be part of the profit and loss statement for the future. The budget for procurement will include cost of material. The budget for operation will include cost of material, plus their salaries. Budget for HR will include only the costs, salaries, recruitment, etc. Budget for sales will include revenue, how much they're expecting to sell, and their costs. So it depends on where is your department. Okay, so if you look at this one, this is the total. Let's say, for example, the total cost was 520. We sell 130,000 unit. It will cost me 520,000 dirham based on 4 dirham per unit. So that means I will get 780,000. It's gross profit, 60%. So this is the fixed cost or period cost or operating cost. It's based on time cost. So if you combine it all together, you will get this one here. This is a profit and loss statement. Sales minus cost of goods sold, or sales, you get the gross profit. The gross profit is just, it represents mainly three departments: sales, operation, and procurement. So if you look at the profit and loss statement, you can analyze, because if the gross profit enhanced, that means there was saving somewhere. So that means it can be worked as a KPIs for all the departments. Fixed cost or operating costs, it represents all other organized departments. And this is what we got. It's called profit and loss statement, or statement of financial performance. Okay. So if we look at this one now, we got here balance sheet. That means assets equal liability plus equity. Assets is the investment. Liability and equity is the financing of the investment, finance. So this is statement of financial performance. Okay, investment and the financing of the asset. If you buy assets, you financing from liability, will be more liability. You financing more in equity, so it depends. Mainly, it's supposed to be not that much liability because it will be a risk. Are you able to pay it in the future? You are going to sell, but are you going to collect most of your sales to be able to pay the liability? So this is the balance sheet. Okay, so it's called statement of financial position. So that means the true measurement of financial wealth is how much you own, your assets. Here we need to look at also something called market value, because by the time the assets, you buy assets, it loses its value by time. So the book value, you are reducing its value, called depreciation. We need to look how much it equal to market value currently. Like for example, you buy a car. It will cost you, let's say, 100,000 dirham. This car, after 2 years or 3 years, market value will equal to 60,000. The assets minus liability, you will get your net worth here, okay, or net assets. Now, there is a slight difference here between net worth and net assets, or what that means. So you buy these physical assets, and you need to pay liability. So this minus this equal to how much you got in equity. But many times organizations have something called intangible assets. That means the reputation of the organization, the name. For example, if you build an organization and after 1 year, 2 years, 3 years, you build a reputation and you need to sell your organizations. So the buyer will pay more than your net assets. This additional is called goodwill, which means they are paying you more than your organization balance sheet value. It's called intangible assets. The additional money received from the, which means how much is your assets minus liability. You got 800,000. If they pay you 1 million, this 200,000 is called intangible assets. So that means this is really your net worth because you are getting additional 200,000. So that means your net assets will equal to 800,000, but your net worth maybe will be more because you have intangible assets. So this is the structure of the profit and loss statement. Revenues, volume, cost of goods sold, minus all the indirect or operating cost, which will be time cost. So that means at the end, you will get your operating income, the income before you pay interest, tax, and depreciation. And at the end, you will get your net income. Net income will be in a form either cash or receivables. Receivables means the difference between collection and payables. This is the cash flow. Because sales, you sell, you collect, you will collect in the future. You buy material, you pay now, you will pay in the future. So this is the cash flow statement. And at the end, the results will be added to the assets. The difference here will be added either cash or receivables in your assets from your equity. So this is the summary of the balance sheet, assets, current and non-current. What the difference now? Cash is a current asset, which means you are using it on daily basis. So this is economical. You are using to pay your economical performance on day to day. So that means non-current assets, which means fixed assets, which you are using it for the term of investment. So when I buy the machine, I'm not buying the machine to sell it, to run the business. So it's called non-current assets, expected to be held in the organization more than 1 year. While that my cash, I'm using it on a daily basis. It's my assets, but it's different type of assets. Liability at the same time, my salary, if I don't pay it on time, it's liability, but I have to pay it. Long-term loan, more than 1 year, it's a non-current liability. So it looks like we have three financial cycle of financial. It involves three things: investment, financing of the investment, and dividends. So you invest, you buy the assets, you finance these assets through liability or equity, and this is the balance sheet. Now we start to work, start to generate revenue, and it will cost us cost of sales or cost of goods sold plus operating cost, and this is the profit and loss statement. And at the end of the period, when we get profit, we need to identify, shall we pay dividends, which means the shareholders or the owners, how much we need to pay them. The remaining, we keep it in the organization in the form of a retained earnings. We reinvest again. The reinvestment, again, it could be part of it, retained earnings, part of it from external. So this is the financial cycle. Start with investment, asset, financing the investment, liability or equity, and this is the balance sheet. Now we start to work statement of profit and loss, or profit and loss statement, or statement of earnings, or comprehensive. So it's revenue minus total expenses, which means cost of sales, etc. Operating costs, you get either profit. Okay, so this is the things. Now, statement of cash flow. Statement of cash flow, there are two types of statement of cash flow. Statement of cash flow, we need to look at previous period, what happened. The money generated from operating activity or investing on finances. Where did the money go? But the most important cash flow is the future cash flow statement, which we look at when we are expecting to collect the revenue and when we are expecting to pay our cost. This is called cash flow statement. Very important. Why? Because we do the budget for 1 year. We're expecting maybe to sell 3 million, but the most important thing we need to see the collection. One we are expecting to collect. Maybe we'll end it up that, yes, correct, we can sell, but it looks like we will not be able to maintain the balance, positive balance in the bank because our collection will be there. So it will end it up, maybe if we look at the end of the year, we can generate profit, but we cannot survive till the end of the year because we don't have enough cash. We're expecting to collect the money later on. So the option could be taking another loan maybe or something else. Now, this statement, it provides an overview of the organization, what could be. So I will look at profitability, if the organization is profit or not. This is profit and loss statement. Return on investment. At the same time, do I have cash or not? Liquidity. So I might be profitable, but I'm not liquid. Efficiency of the management. I will look at how much every asset is generating revenue for me. I might end it up like buying more assets. I'm not generating more revenue. So I was not efficient to use these assets for, so my assets is not turning over. Inventory also. I might buy a lot of products, material, raw material to use it in this coffee shop, but I'm not selling. So this will expire in the future. Capital structure, which means my formula, which how much is the liquid equity and liability. So this assets from liability and equity, my capital structure. So this will go in much details. We have like, when we do these courses, we'll go like 3 days. Sometimes we're going much details, step by step, how to do. This is just a brief introduction about these things. So by looking at the profitability, I know if the organization is profitable, but it's not liquid, but I need to take decisions. It's not like just for information. There will be certain KPIs, indicators will help me to take decision. Maybe I will not invest in some sort of product who's not generating cash for me. Maybe even though it's more profitable, maybe I will stop using dealing with one customer because this customer is increasing my revenue, correct, but it's not paying. So that means it will end it up, I don't have enough liquid because I'm using more resources for this customer. So it will help me for decision making. You look at if the organization is profitable, liquidity, efficiency. If the manager is asking to buy more machines for the shop, but they are not generating more revenue. So why they are buying the machine then? Because it costs me money. So I will look at is the efficiency. Capital structure will ensure that we don't have that much liability because it will become a risk in the future. Will not be able to pay these things. So who's using the financial statement? Mainly there are internal users, investors. They will look at the security of their investment. They will look at how much they have return on their investment. Owners to help them make decisions, stop the dealing with some of the customers, buying from different suppliers, invest in a new business, whatever it is. It helps them to take a decision. The managers also, how to control the business, whether it's a budget, whether it's forecast, whether it's a plan. Employees, they will ensure that the company is stable, they have enough cash to pay, etc. External users, potential investors, information, so it's risk and return. If I want to invest in this organization, are they paying dividends? They have a lot of liabilities? Maybe I invested in this company, they don't have cash. So in the future, will end up I'm losing. I'm not getting enough money. Financial institutions like banks, if I want to lend the organization, I want to ensure that the organization will be able to pay back for me. Suppliers, company pay on time. Customers, company stability. If I want to work with the organization, I want to see that this supplier, as a customer supplier, will be able to survive in the future, provide a quality material for me. So by looking at only financial statement, I can take many decisions, and everyone will look from every stakeholders will look for a certain part of this financial statement. Also, the government will look at the company's compliance with rules and regulations, paying the VAT, the income tax, depends on what type of tax, and the general public. I can understand if the organization is investing some of its money in the corporate social responsibilities, because usually anything reflecting in finance. So those three financial statements reflect everything happening within the organization without even looking at other things. So in summary, financial awareness is the key to manage your organization and department. What we look at is very brief, just a very simple introduction. Mainly we're going into much detail, step by step, how to do it, and these things, how to analyze it by case studies. Understanding how finance works helps people and organizations to make proactive decisions. Okay, proactive decision rather than the indicator, because when we do the budget, we're not waiting at the end of the year, because based on what's happening, we can do corrective actions. Profit is not cash. You might sell today and collect your money after 3 months. And most of the problems comes from liquidity, by the way. I mean, many organizations, most of the organizations have profit. It's not about and control the cost, but the problem of collection. There is no liquidity. Main statement is the balance sheet or statement of financial position, showing you your assets and liability and equity. Profit and loss is the financial performance. Statement of cash flow reflects organization's liquidity. So mainly we look briefly at the three key financial statements. It's supposed to be 45 minutes. Now it's more than one. It's fine, but it's important subject. It takes more time to go deeply and step by step how to understand these things, how to apply it actually to your department. It's the most important thing. I can take part of it, apply cost only. Some of them, it depends on the level also. For mid-level management, they are in charge of the whole P&L. Top management, they are in charge of the balance sheet and the P&L. Some of the department, they're just only on part of the cost of the organizations. Okay, so let's look here now at check your knowledge. I mean, it's I know it's a big subject, but we see that the importance of financial understanding finance from the non-finance point of view. You don't have to do these things. You just understand how to read it, how to do the analysis, because in our courses we do on much detail. We'll go on deeply on how to analyze it, what ratio we need to use on every step of the balance sheet, every element of the financial performance of the P&L. Any question? If you have any question, I'm ready to answer any question now because we're about to finish. Thank you, Salim. I hope you it was like beneficial for you just to understand that the concept of finance is, and it's not difficult, by the way, it's very simple just to know how to use these things, how to apply it to your department. Thank you. Now let's try to answer some of these final questions. Which statement would any stakeholder most likely to use to evaluate additional financial performance of the organization? I will look at statement of financial position is the balance sheet. Statement of financial performance is performance means how I perform in the organization. How my sales was good. I was controlling the cost of sales. I did not spend. I was managing within the budget limitation, within the operating cost. So what do you think? Which statement mainly it will help me to identify my financial plan? Correct, balance sheet, and also balance sheet at the end, I will add to it also P&L. P&L will help me financial performance, mainly P&L. What does variable cost means? Remember when we need to prepare one. Yes, correct. It's more according to correct. So it varies with the level of production. The third one, all liabilities are interest-bearing debts, correct or no? No, correct. The more I acquire assets, the more my net worth will increase or no? Correct. What does equity means? Assets minus liability plus equity. Equity is what, if we need to define it? Correct. Cash that invested by the shareholders. What does net worth mean? Correct. Share, exactly. Value of shares invested, because sometimes the organization might be public. Correct. What does net worth means? It's similar to equity, because correct. So here it's okay, not the profit. No, the total worth of the organization. It by profit. Correct. The profit at the end of the period, it will close the profit and loss statement. It will be added to the equity part of the organization, and it will enhance the net worth. So your answer correct. So assets minus liability and equity, correct. So assets less liability will equal to net worth. But with net worth will include intangible assets. That's the difference. Just we'll add to it the assets which will be tangible and intangible. Why? Because let's say, for example, I have organization. My assets, physical assets, current value equal, let's say, to 1 million. But if I want to sell it, maybe I'm asking for 2 million. So this additional 2 million is for me. So this is intangible assets. So this is my real net worth. When you add the difference between equity and net worth, just the intangible assets. So what's the gross profit? Not the net profit, gross profit. Correct. Revenue minus cost of sales or cost of goods sold. Correct. what does fixed cost mean? Sales minus cost of sales. So fixed cost, variable cost is the cost is vary with the level of production. Fixed cost is fixed for a period. You can call it, yes, correct, like salaries, these things. It has many terminologies. You can call it fixed cost, but it's not really 100% fixed. Operating cost, overheads. But mainly the terminology operating cost better representing of these things, because fixed cost, correct, usually indirect cost, but it's not 100% fixed, because let's say utility, electricity, sometimes you pay more or less, a stepped fixed cost, but still not variable cost. Correct, services by the company. So usually this is what we have today. The most important thing is to ensure that to manage the budget mainly is to look at how much we need to save and the remaining to how much we need to spend. Usually when the organization start to control cost, first thing we need to look at how much the organization needs profit. So for example, like here, I'll show you 1 minute. So instead of looking how much I will sell, it's called target costing. For example, this is my sales. Let's say, for example, 3 million. So instead of looking at the cost, I will ignore it. I will look how much I need net profit. For example, I need 25% net profit from sales. So this one will be my target cost. So by doing this process, I will see that whatever I do, I need to manage my cost in a way that this is what I want at the end of the period, 25%. So instead of looking at sales, how much it will cost me and what's remaining, no, I will look at the sales and how much I need profit. So my target cost, so I will look at my target cost plus the real cost. This will be the cost gap. But I need to work until it reaches my target cost. This will not change, 25%. This is how the organization can maintain its cost minimum using different costing method. It is discussed in our 3 to 4 days training, what type of costing method we need to minimize the cost. Okay. Okay, now, so we reached the end of the training. Thank you for your time. It's a nice subject. It takes more time to understand better, but at least you have the importance of finance for non-finance. Not difficult at all, just to understand how to read it and to relay these things to your department, because the higher you go on managerial level, the more you need financial decisions. Thank you very much.